Microvision just had their earnings report and their stock really took a beating. On Friday, it was down 15%, and from its all-time highs, it's down 50%. So, is it time to buy the dip? Let's talk about it. Hi y'all, my name is Greg and I make videos about the stock market and options trading. Today, I'm going to be giving you a post-earnings update on Microvision stock, ticker MVIS. So to break this video down for you, first we're going to go over their financials, then we're going to go over the guidance from this company, and finally at the end of this video, I'm going to be answering the question, am I buying the dip? But before we get into it, if you enjoyed this type of video where I deep dive into these stocks, make sure to leave a like down below and subscribe if you're new to the channel. With that out of the way, let's talk about Microvision. If you're buying Microvision stock, you're probably not buying for their financials because, let's be honest, they kind of suck. But it is important to look at the financials when it comes to these companies to see how healthy the company is running. One great thing that I found in their financials, though, was their cash balance, and this should allow the company to live on just a little bit longer. In my last video, I talked about how this company only had $17 million of cash left after spending $13.5 million in operating expenses last year, and if they continued at this pace, they'd be running out of money within the next year. Well, lucky for them, retail investors like you and I gave them a lifeline by sending their stock up so they can do an equity offering. I've seen this become more and more common where companies are on the verge of bankruptcy with little to no cash left. Then they announce some new product, investors get hyped about it, send their stock up, and then the company does a share offering. Microvision did this to the tune of $50 million with an at-the-market equity raise on February 16th, and on December 31st, they did another share offering worth $13 million. These two share offerings more than quadrupled their cash balance from just $17 million as of the year in 2020 to now over $75 million. And they say that this cash is enough to last them for the next 12 months, so they get to live on for another year. Their total operating expenses for this quarter was $6.7 million, and according to their CFO in their earnings call, they expect next quarter's operating expenses to be somewhere in the range between $13 million to $14 million. So after Q2, they should still have about $55 million of cash left over. If they keep their operating expenses the same as they're expecting for quarter 2, this cash should last them for another 4 quarters, which is right on par with their 12-month expectations for how long this cash should last them. So right now they are sitting pretty on cash, but there is one major issue when it comes to this company's financials, and this is what worries me the most. The revenue for this quarter only came out to $479,000, which is down significantly from the same time last year. In Q1 2020, they did $1.5 million in revenue, which still isn't a lot, but that's more than 3 times the sales that they did this quarter. Because of their low and decreasing revenue and their increasing operating expenses, their net loss for this quarter came out to $6.2 million for an earnings per share of -4 cents. So the revenue is really troubling for me, but hopefully with their new LiDAR system, they should be making a lot more sales in Q1 2022 versus this quarter, and we'll see a massive increase instead of a massive decrease like we saw this year. With all this money that they're putting down on operating expenses, and more specifically research and development, this seems pretty promising. Their R&D increased from $3.7 million to $4.5 million over the last year for this quarter, and this represented about a 20% increase year over year. A lot of this R&D money was probably put towards their LiDAR system, which I think was the main event from their earnings report. This was the first thing they brought up in their earnings call, and it was pretty much the only thing they talked about. And this is a bit unusual since earnings calls are usually about the financials of the company and not a new product, but they use this as an opportunity to talk about the future of the company and where they're going with their new LiDAR system. They talked about how their LiDAR system is a cut above the competition, and they gave us some prospective timelines. In their earnings call, CEO Sumit Sharma said that they expect initial sales of their new LiDAR system to start in the second half of 2021 after some internal and external testing. So it seems to me right now this product is in its prototype phase, and it should be hitting the market sometime in the next few months, as early as July. Mind you though, they did say in the second half of 2021, so this could be any time between July and December. Hopefully they're able to get this out sooner rather than later, because from the sound of it, it sounds like their new LiDAR system is way better than the competition. Their CEO believes that the best way to compare themselves to the competition is looking at points per second, where their new LiDAR system is able to do 10.8 million PPS. Velodyne technology, according to their website, operates at 2.4 million points per second. This means that Microvision's LiDAR system should be about 4 times better than the competition according to this metric, but what really sets them apart, I think, is their frame rate. The CEO says that their ability to output axial, lateral, and vertical velocity of moving objects at 30 Hz is groundbreaking, and no other LiDAR system has this frame rate. He also talks about how their technology doesn't have interference issues like the competition, and their addition of lateral and vertical components of velocity allows them to better predict the future position of moving objects. And because of their higher frame rate and their ability to detect lateral and vertical velocity, they said that this could mean the difference between active emergency braking, stopping short of an accident, versus an actual collision. That's exactly what I talked about in my last video, where I said that they should be able to detect velocities a fraction of a second quicker and prevent you from a crash. And supposedly, their technology can get even better with software. In their earnings call, they announced a potential second generation sensor based on the same hardware, but their proprietary software could add features like emergency braking, active emergency steering, active lane keep, and more. They said that they expect to produce somewhere between 12,000 to 15,000 LiDAR units per year by 2022, and they expect to meet mass market production by 2024 or 2025. But that's enough about their future. Let's talk about their stock and whether or not I think MVIS stock is a buy. For me, no, I don't think the Microvision stock is a buy, and it's nothing against the company or their technology. I think their technology could be revolutionary, but I'm just a very conservative investor. After seeing this company only did $479,000 in revenue last quarter and their stock is trading at a $2.4 billion market cap, I can't justify buying into the stock. Their total revenue over the past year came out to just $2.1 million, and if we divide their market cap by that revenue, we get a price to sales ratio of over 1100. I prefer to invest in stocks with about a 20 price to sales ratio, so Microvision stock is a no-go for me. But hey, maybe you have a better criteria to value the stock. I think a better way to value the stock would be a forward price to sales ratio, where you take their projected earnings for the next year instead of the past year, but unfortunately they just didn't give us that information. Because they're introducing a new technology in an emerging market, they say that this creates uncertainty in their ability to project their revenue over the next year. I think that based on their 12,000 to 15,000 production estimates for their LiDAR system over the next year, if we value those at $1,000 a piece, they could be doing between $12 million to $15 million in revenue just based on that. I don't know the actual price of their LiDAR system just yet, but I can only assume based on the competition's pricing that it would be around $1,000. Hopefully we're able to get an estimated price for this LiDAR system sometime soon, because it's supposed to be hitting the market sometime in the second half of 2021, and from there we should be able to better project the revenue for 2022. If you're buying this company though, you probably don't care about their financials as much as you do about their technology. And I gotta admit, their technology does seem revolutionary, the specs are way better than the competition, and this could make them an industry leader. Given this advantage, more companies might want to adopt their LiDAR system over the competition, resulting in more sales for Microvision, which would improve their price to sales ratio, which we talked about earlier, maybe making the stock a buy for me in the future. I think if they're able to establish themselves as an industry leader, this would make me a lot more comfortable in buying into their stock. Since LiDAR for autonomous driving is an emerging market and we're seeing this technology improve so quickly, another competitor could come out with a better LiDAR system that works better than what Microvision has right now. This brings a lot of risk buying into their stock, but if it fits your risk tolerance, then by all means, go ahead and buy it. We all have different ways of valuing companies. I'd love to know how you would value this company down in the comments below. Give me your price targets, your analysis, and any information you think I'm missing. If you gained anything out of this video, make sure to leave a like. And if you want to know what I'm trading, when I'm trading it, I post live trade alerts over my premium Discord, which you can find on my Patreon down in the pinned comment below. That's all I've got for you today. Thanks for making it all the way to the end of this video, and thank you to all my patrons for the support. And as always, remember to stay positive, stay green. I'll catch you in the next one. Bye guys.